This video provides an analysis of NVIDIA Corporation's fiscal Q3 2026, focusing on accelerated computing and the Blackwell transition. In summary, NVIDIA is navigating hypergrowth while managing product cadence shifts, geopolitical alignments, and physical infrastructure constraints. NVIDIA achieved record financial growth, with total revenue of $57 billion, a 62% year-over-year growth, and an operating margin of 63.1%. Data center revenue hit $50.9 billion, establishing NVIDIA as the primary engine of AI infrastructure. Geopolitical export controls have restricted access to the China data center market. This has been offset by surging demand from U.S. hyperscale customers, resulting in a significant geographic realignment of revenue. The margin profile is transitioning, with a 1.2% dip in gross margin. Management attributes this to the planned shift from Hopper HGX systems to full-scale Blackwell solutions. The Blackwell platform is the primary growth engine for data center revenue, constituting the majority of segment billings this quarter. It offers full-scale data center solutions, accelerates the shift to accelerated computing, and supports agentic AI applications. NVIDIA's supply chain moat is underpinned by substantial commitments, including $50.3 billion for manufacturing and supply, $26 billion for multi-year cloud service and R&D, and $6.5 billion in strategic ecosystem investments. Critical watch points include managing export controls, infrastructure limitations, supply chain long lead times for Blackwell, and the complexity of rapid product cadences. NVIDIA just delivered another quarter of extraordinary AI-driven growth. Revenue surged again, almost entirely powered by the data center segment, as global demand for accelerated computing remains exceptionally strong. To support that growth, the company deliberately expanded inventory and receivables. At the same time, geopolitical realities were clearly visible. NVIDIA's China data center business was effectively eliminated due to export restrictions. The bigger picture is even more important. What we're seeing is a structural re-architecting of global computing around NVIDIA's accelerated platform. The company is becoming the central engine of the AI era. But this secular trend is now colliding with real-world constraints: power availability, data center buildouts on the customer side, and increasingly binding political limits. From an earnings perspective, fundamentals actually improved. Even with a product mix-driven dip in gross margin, operating leverage was powerful. Operating income and net income both grew around 65%, confirming that profitability is scaling with revenue. Looking ahead, demand should remain strong, especially with the Blackwell transition. But growth rates may moderate as infrastructure bottlenecks and the loss of China create tougher comparisons. Competitively, NVIDIA's technology moat is strengthening, even as policy shrinks the market it's allowed to serve. If you have any questions, please leave us a comment.